Listen, we never stop the grind, okay? Now we're going to get right into Ford, as we love to do. Uh, Obviously, the first two companies we've looked at for the day, they've been up. Um, Now, obviously, you see a bad reaction after hours to this earnings from Ford, 3% downward. Now, I was expecting some good numbers out of Ford. I can't lie to you. I expected some pretty decent numbers. My concern, though, I think is an issue I think a lot of people see with many vehicle companies right now. Uh, there are some production issues potentially. My guess is there could be an issue with guidance that is causing this company downward movement. Because overall, we're going to see good comp overall in terms of profitability as well as revenue, because the greater China area was really not providing them anything during this quarter last year for really a month and a half. So overall, expecting pretty good comps, next quarter being a lot larger, but my concern here is the macro environment in terms of automobiles. We've seen it with other companies in terms of reporting earnings. GM completely shut down their factory right now, our local one at least, because of the fact that they don't have chips. Chip shortage globally is causing issues with production of vehicles. So my assumption is that could have something to play with this downward movement, because anytime you hear the fact that halting production, I mean, it's inevitable. Ford's going to be halting production. They have to. If a company like GM is as well, Ford's going to be doing the same thing. So let's look at these earnings, see what we got. Overall, non-GAAP EPS of 89 cents beats by 68 cents. What? And a GAAP EPS of 81 cents beats by 63 cents. That's a lot better than I expected in terms of a profitability standpoint. That is significantly better than what I would have expected. I didn't see over 50 cents, even in a GAAP EPS standpoint. I didn't see that happening. Yet here they are with 81 cents of GAAP EPS. That, my friends, is nice. That's going to be a huge increase year over year too, but that's a really nice beat. And even from a revenue standpoint, $33.5 billion is up 7% year over year. That's a massive growth because it's a beat by $1.3 billion as well. Now that, just the numbers of there, that's what I expected out of this company. It's even way better than I expected. I can't lie. I would never expect Ford to beat by $1 billion on consensus. Never in my life have I seen it happen, okay? This company disappoints me on earnings quite a bit, trust me. I've been holding it for a long time. That's just crazy. Wow. Total EBIT outside of North America came in at $454 million, which is an increase of $980 million from this quarter last year. Obviously, again, as I mentioned, huge profitability issues in the greater China area that caused this. Underlying trajectory of the business is improving. Full year EBIT now expected to be $5.5 billion to $6.5 billion. Including, here it is, a $2.5 billion adverse effect from a semiconductor shortage. Not a shocker. It's what I expected. Obviously, it's an ongoing issue. It's not like this is news. I mean, if this is news to you as an investor, if you're one of these bigwigs that is selling the stock because of this, I just got to be honest. You really aren't intelligent. If you did not know about the chip shortage prior to this earnings, I think you might want to get your money out of the game, because you are breaking the system for everyone, right? We should not have the system fall because you don't have a brain and can't look at contemporary news, okay? Let's see what else we got in the finer details. Ford says it expects to lose 50% of its planned Q2 production due to the chip shortage. Ugh. Gosh. Which is up from 17% loss in Q1. Good grief. The problem should bottom out during the current quarter with improvements through the rest of the year. Ugh. So I get it. Yikes. I mean, I do get it. I get why the stock's potentially down, but I don't think it deserves that necessarily, because this is something we've known about. Again, as I mentioned, we've known about the chip shortage. It's not like this is news to anyone. If it is, you just don't do enough research on these companies. If you're holding these companies and you didn't know about the chip shortage, I'm sorry, you've made a mistake. You haven't done enough research. So it is concerning. 50% of production planned. It's rough, but again, they have vehicles left over in inventory. This is not like they're not going to be selling vehicles. The company anticipates the flow of semiconductors from its Japanese supplier to resume by the end of quarter two. It says the broader global semiconductor shortage may not be fully resolved until 2022. Now, that is some gloomy information, but again, the company's got backup on vehicles, and it has plenty to post great comps year over year, no doubt. It will lose 10% of the second half production as well, or 1.1 million units of production this year. Yeah, I mean, that's pretty rough. You hate to see it. North America revenues grew by percent, in case you were curious. My assumption is they meant 5% to 23 billion. Helped by a strong consumer demand for the Mustang Mach-E. This is what I'm talking about, the brand new F-150 and the Bronco Sport, as well as tight vehicle inventories, related production declines. Not a shocker. But what I care about a lot here is the Mustang Mach-E all-electric. This is going to be where the company makes some money, okay? All-electric for Ford will be massive. When they release the all-electric Ford F-150, it's going to be huge. As well as, I was always excited about the Bronco Sport because you bring back a classic with a slightly new design. It's a good-looking vehicle. Good to see that it's doing well. I hope they give me some numbers in terms of that. Also, a non-cash gain of $902 million on their Rivian investment as well. Pretty good. Let's look at this press release, though, okay? We'd like to see that. Producing a net income line of $3.3 billion, which is the best since 2011. Hey, ladies and gentlemen, I'll highlight it for you in case you didn't see. The best since 2011. That is encouraging news, all things considered. Even if you see a chip shortage, whatever it might be, I like seeing that. Profitability, that's an incredible line for Ford. As I've said, this is a company that doesn't do stuff like that. They don't. Popularity comes from Mach-E, F-150, and Bronco, and it added to the profitable growth in in North America. That's just beautiful. Yeah, I like seeing that. I really do. Revenue, obviously, we saw growth of 6%. Tiny revenue stuff here, but regional highlights. Oh, baby. Now that's an increase. So in terms of total autos, market share-wise, they're making up 5.3% of the auto market. Compared to last year, it's down 0.6 percentage points. So definitely a decrease in overall total market share in vehicles. So you can mention that, no doubt. Ford's first quarter North America increasing by 5%, as we saw that. But again, I want to see some of these numbers on these vehicles. Mustang, there it is. Mustang Mach-E illustrates related potential. 70% of customers who purchased the battery electric SUV are new to Ford. That's what I'm talking about. So that's really where you get this excitement here. Some people are going to be looking for all electric, and that is what's going to bring them to companies, right? Quality electric vehicles will do it. 2/3 of reservations for the all-electric SUVs have been converted to orders. That's right, which means people are actually buying them. 2/3. That's pretty impressive. Further enhancements to the online shopping process went live in March, making it easier for people to buy online. Reservation to order rates is similar for the reimagined Bronco Sport. Sales are expected to start this summer. Oh, now that's going to be big for this company. We have big demand already for reservations, but obviously there's no sales yet. Just wait till the sales hit. People are going to be buying this. It's going to be nice. In addition to bringing more electrified vehicles to market, the company this week announced a formation of a new global battery center of excellence, Ford Ion Park, to accelerate the research and development of battery and battery cell technology. which includes battery manufacturing in the future, which is good. It's massive for electric in the future for this company, and they have to go electric really to grow from here, as we all pretty well know. So, yeah, pretty nice. I like seeing those numbers. This was the best ever first quarter for Lincoln brand vehicles in China, 90% of which are locally built, which really helps with the profitability standpoint. Good to see the numbers do that. It really is good to see that. Yeah, I like seeing it. So, outlook, obviously hard to say. On some things, we saw a little bit of the adverse effects. I do want to look at the balance sheet on this company. That's right. Here it is. Total current assets at $116.7 billion. Last quarter, it's a 3-month comparison. Right now, sitting at 113.9. A little bit of a decrease in cash and cash equivalents. Total assets in general right now are $260.8 billion. Compared to $267.2 billion. One thing I do want to mention, obviously, you see this company's got quite a lot of assets on the balance sheet. There's no doubt. Let's look at liabilities. Obviously, we saw assets decrease. I'm going to hope they paid off some liabilities. Total current liabilities sitting at $94.2 billion compared to $97.1. Really $97.2. So they did pay off $3 billion there in total current liabilities, and liabilities in general paid off quite a bit, sitting at $226 compared to $236. So around $10 billion decrease there. Total stockholder equity sitting at 33.9 compared to 30.8 billion. It's really in the right direction. It's a pretty nice balance sheet. It's loaded with cash, and cash equivalents. It's a large balance sheet. I like it out of this company. Not necessarily the most equity out there, but it's still a profitable company by a large stretch, and I do like where they're at with this. For me, this company's a no-brainer. I mean, I can't lie to you. Obviously, they haven't resumed the dividend yet, but with profitability numbers like this, the dividend's coming back. There's no doubt. And you're talking about a company trading in a market cap of 43. The PE ratio is going to be dirt cheap, as you might have seen, because if they're even able to put up $2.50, let's say, of EPS this year, which I think is fully manageable by the numbers this quarter so far, this is going to be a company trading in a dirt cheap PE ratio. I mean, we're talking about literally dirt cheap. So, I mean, what do you say when a company's trading in a PE ratio under 10? Because they easily could be. So, and a market cap of $48 billion on this seems incredibly cheap. We're talking about a company that nearly put up that much money in this quarter alone, $33 billion in this quarter alone. They're trading at a market cap of $48 billion. The market's not fairly pricing Ford, and it really hasn't for a while. The company's got a big future ahead of it with all electric, and you need to consider that. All the other companies that are providing electric, they're getting all the hype. Meanwhile, the traditional legacy companies, which are getting into the game now, just aren't getting anything. They're not getting any love on the matter. And Ford's down here, and I just don't believe it. Down at $12 and below it's a steal. I think it's still a steal for this company over the long term, even for the dividend in the future. I just don't think the market's fairly. If you're talking about valuation, Ford's one of the best buys out there. Now, will it necessarily get you a lot of capital gain? I can't say that because historically it hasn't. But in terms of pure value plays, this is a great one. It's a stock that is just undervalued compared to the whole market by a very, very large margin. That's what I got for you today. Hope you enjoyed.